Hi everyone, it's June 19, 2025, 9:40 p.m. Japan time. Today the Nikkei closed at 38488 p.m., down about 1% from yesterday. It felt like a bit of the pullback, and the Nikkei Volatility Index is at 25.2, showing that while some caution remains, there's still a sense of resilience in the market. Right now, in the night session, we are seeing the Nikkei back up to around 38640 yen, a bit of the rebound. So has the market peaked? It's still unclear, but I personally feel there may still be room for upside. Today's PER is at 15.58%, and the projected EPS remains solid at around 2470 yen, a continued recovery trend. Now, one thing that caught my eye is electricity price in Japan. JPEX price climbing into the 14 yen range that might reflect not only the Israel-Iran situation but also Japan's recent heat wave. We are already seeing consecutive days over 13 and 13 C. Enough it is just June. According to some studies, after a few days above 13 doshi, human cognitive function starts to drop significantly. So the heat itself may become a factor in market psychology or even behavior. That could be part of the reason why electricity prices are rising domestically. As for interest rates, 13-year JGB yield remained high at 2.91%. We still are in the upper range, and from a bond yield-based valuation perspective, the current equity price might look a bit strange, but they are not dropping easy. So this consolidation around 38500 yen might reflect the market pricing in this higher yield environment. Now, if we shift the lens to electricity-based valuation, meaning earnings power adjusted for energy cost, I still think there's room for growth. Which valuation lens is the market using right now? That's an open question. But either way, if we stay this strong for long enough, there's a really possibility we break above traditional fair value ranges. Now, switching topics, we talked recently about this Iran-Israel tensions and the risk of the potential closure of the Straits of Hormuz. That would be a huge problem for Japan from energy security standpoint. Of course, that would hurt the government and the general public. But and this is key. How much would it really impact the Nikkei companies? Many of these firms operate globally, and their production bases aren't necessarily in Japan. So, from that angle, the actual earnings risk for a Hormuz disruption may be smaller than expected. In fact, and the more global Japanese firms become, the less connected they to domestic vulnerabilities. In some sense, corporations may be more resilient than the state itself. So, even if the Hormuz risk plays out, it may not heavily impact Japanese equities. That could partly explain the relative strength of the Nikkei. Yesterday, the S&P was only up about 0.0%, but Japanese equities have clearly outperformed, and this is not new. Japan has been building resilience over time, preparing for geopolitical risks. I think the accumulation of preparedness is showing now. We should also consider Japan's geopolitical positioning. If we look at global flashpoints, Ukraine, Russia, the Middle East, um, India and Pakistan, Venezuela, most continents are unstable. Yet, Japan, historically protected by the sea, is relatively shared. From the Mongol invasions in the Kamakura era to now, Japan has avoided many major military conflicts. That might explain why investors are seeing Japan as a kind of geopolitical safe zone. Yes, Japan is energy vulnerable, but it's diversified its supply, importing from Saudi Arabia, the US, Canada, and others. The diversification may help cover those vulnerabilities. So, when we analyze the markets, we need to consider not just immediate threats, but also how the system is structured to absorb them. Right now, the world is chaotic. Israel tech sector is reported destroyed. Trump is talking about sharing the FED himself. A lot of noise. And yet Japanese stocks are holding strong. Of course, there may be some short squeeze happening. People who shorted early are now sitting on losses. But even with the volatility index rising, Japan's market is pushing higher. That's unusual. Typically, volatility and the stock price move in opposite direction. This current behavior is rare and worth paying attention to. Now, looking ahead the US market is closely today, but Japanese CPI data for May comes out tomorrow morning. I think May CPI will likely come in calm, and beta price were low, and energy price hadn't picked up yet. The supermarket recently even felt like inflation was cooling, but in June and July, things could heat up, literally, with temperature rising and electricity demand growing. That's something to watch. But for now, May should be fine. That's my take. Alright, that's it for today. If you enjoy this content, feel free to follow me on Longput my contents. See you tomorrow again.